Welcome to XYPN Radio, where your host Alan Moore brings you into a community of fee-only financial planners who want to profitably and successfully serve Gen X and Gen Y clients. If you're ready to get the knowledge you need from leaders in your field, learn from forward-thinking advisors, and take action on your own goals, XYPN Radio is the show for you. Here's your host.
Hello and welcome to this episode of XYPN Radio. I'm your host, Alan Moore, and today I'm excited to have Galen, founder of Buff Your Finances, on the show today. Galen was following the typical career path, as most advisors do, when he had the opportunity to work very part-time, just a couple hours a week, as a virtual paraplanner for another advisory firm. He made the mistake of putting the new job on his LinkedIn profile, which his full-time employer saw and fired him on the spot. It left him in an unexpected lurch, trying to figure out what his next steps would be. He ended up launching his own financial planning firm several years ahead of schedule and focuses on providing student loan analysis services to clients as well as through other financial advisors. We dove into the details of exactly how he provides the service, how he prices it, and the technology he's using to become more efficient. His first year has been a little slower than he hoped, but it seems like it's starting to pick up, and his focus is shifting to providing services to clients on a retainer basis. He's diving into his niche market of video gamers that use Twitch, a live video feed service, which can actually make them quite a bit of money. You can find any of the additional resources that we mentioned during the episode at xyplanningnetwork.com/121. Also, be sure to go to xyplanningnetwork.com/VIP to join our private group just for XYPN Radio listeners. It's the community of advisors we've all been looking for that's there to provide support when we need it the most. Best of all, it's free. Again, I encourage you to check that out. It's xyplanningnetwork.com/VIP. Without further ado, here's my interview with Galen. Hey, Galen, welcome to the show, man. Thanks so much for being on.
Thanks for having me. How you doing?
I'm doing awesome, and I appreciate you reaching out. Listeners are going to start catching on to the fact that when people reach out with a cool story, I'm like, heck yeah, because it cuts down on my having to think through all of the next 12 guests on the show. But you had reached out and have just a really cool business setup that I'm excited to chat about. So if you will, give listeners just sort of like an overview of where your business stands today, sort of how many clients or what types of clients do you work with, where you located, that sort of thing. And then we'll sort of dig into the details as we go.
Sure. I'm located in Southern California, about halfway between Los Angeles and Santa Barbara. It's a really old community. It's sort of where people go when they want to get out of LA or Santa Barbara and have money. My business is an RIA. I operate 100% virtually. I actually work out of a co-working space most of the time. And I'm focusing on two different niches of clients. One is a group of professionals who are streamers on Twitch, where their full-time business is being entertainers. And that's kind of new. And then the other one is working with some consultants from a job that I did back in my history, where they're young, high-income earners who are trying to figure out how the heck they manage that. I also, and I think this is more to what we're going to be talking about in this podcast, have a wing of my business where I focus on helping people figure out student loan plans. So that's project work, a one-time thing. And it's just talking with someone, figuring out what they're hoping to accomplish with their student loans and helping them feel more confident. I actually had someone on a call last night say, yeah, we're interested in doing this because we think it'll bring a lot of peace of mind. And I mean, that's sort of what we all sell ultimately, right?
Yeah, so it's really cool because I think that's what's unique about your business is the student loan focus. And, we talk a lot about how important student loans are when you're working with younger clients. And I think people recognize the complexity and all of that, but how to actually make that a business model is the big question. So I definitely want to dig into that. So give me just a background on how did you get into financial planning? Sort of what was your path into this career?
I've listened to the podcast for pretty much every episode. And I think I'm like a lot of people where my path here was very not linear. There's no way you would have ever convinced going to college me that I was going to be in financial services or that I was going to be owning my own business. Despite my family having a lot of people who are successful business owners, that just never was the path that I envisioned. So in undergrad, I studied environmental science and policy, which basically prepares you to go work for the government in a policy role. And then after graduation, which was, 2011, there weren't many jobs in that. space because everyone who had graduated a year or two before me had graduated right after the recession, nailed everyone, and went back and got master's degrees and then were applying for the same job I was. So there were no jobs in that field. So I was trying to find work and got approached via some job website, Indeed, Monster, something like that, by a company called Epic, which makes electronic medical records. And they're based in Madison, Wisconsin. Like I said, I'm based in Southern California. So I said, there's no way I'm going to Madison, Wisconsin. And then my dad asked me how the job search was going. And I said, oh, all right. I got approached by this weird company. And it turns out that he was literally hiring them to do their stuff at that moment. And he thought they were a really cool company. So I ended up going out there and working in what was functionally a tech project management job for a couple of years. It involved a lot of travel, and I burned out of that and then went to go work as a project manager on the tech side for a life insurance company, American Family Insurance in Madison. And they're a really cool company.
So were they building some technology that they needed you to sort of manage the development team on?
They were implementing so I worked on two different projects there. The first one was they were implementing a new universal life policy that they needed to get put onto their systems, which took a lot of work. And the second one was they were actually transitioning to a new software for their underwriting and sales. So helping with that. But while I was there, I got to see, basically, like I said, it's a really cool company. I got to see how much they, despite the universal life thing, really cared about the people they were working with and the kind of help that they could be providing, and how much the people there really wanted to provide a solution that could help folks who were in need of life insurance. So I started looking into it more, and at the same time also got married and went, wow, I should figure out my personal finances a little bit better. So sort of from those combination of things, I started to be less, antagonistic towards financial services, because I had been for a while, because I really hate getting sold to. And, when you're in college and someone's trying to sell you something, it's usually some not that great high commission product. So that kind of turned me off. And same when I was at the tech job too, because they knew I was a young high income earner. So they're like, hey, you can buy, all this insurance or whatever. But yeah, I basically just became less antagonistic as I learned more, and found it really interesting all of a sudden, which I wasn't expecting. And I essentially knew that while I liked my job at the company that I was at, I didn't think I was going to be there forever, because we didn't think we were going to be in Madison forever. So I was starting to look at other careers that could make sense. And through random searches, basically, I found out that the company Zappos, which sells shoes, has like a basically life coach on staff. And I was like, what the hell is that? And I read into it a bunch and went, that is way, sappy's not the right word, but way too sort of squishy for me. But she recommended,
I call it woo woo.
Woo woo is perfect. That is exactly the right description for it. Where it's just like, it doesn't really sit with me. I got a bachelor's of science, and But she, in an article, recommended a book called The Dream Manager, which is basically about a company that improves, it's fictionalized, but improves employee retention by hiring a financial planner in-house to work with their folks. And it's like, wow, this is really...
I didn't know we had any drama series books in financial planning. That's awesome.
Yeah, it was, it was, like I said, fictionalized, a little optimistic, probably, but it was really interesting. I went, oh, I didn't even know that's a job you could do. So then I was looking around for more information on that career, and I found George Kinder's Lighting the Torch, and I read that, and I went, holy crap, that is like the perfect description of what I want to do in life, and it aligns with what I'm interested in right now, which was the personal finance piece. So that got me really inspired, and then I started looking for stuff, and, all roads lead to Kitsis, so I found, at least in financial planning,
yeah, let's say not all roads.
All roads.
In the financial advisory roads.
In the financial advisory space, yeah. So I found his blog and read a whole bunch on it and went, wow, this is really interesting. So then I reached out to my peer network to find either folks who were doing that or people who knew people who were doing that, and got to interview 6 or 7 different people in the industry and figure out, yeah, that's actually what I want to do. So then I basically knew that I knew nothing except for being self-taught. So being, the son of a teacher and a doctor, and okay, well, I should probably go to school for this. And so I went looking for different programs, and my wife, who's very, very practical, said, if you're going to go back to school for something, you should also get a degree that you can use in case you hate this thing that you've suddenly decided that you're really interested in, which was, very reasonable, hard to argue with. So I found a program that ended up working out perfectly for me. It was at California Lutheran University. It was an MBA in financial planning, and it worked out for me great because it was a 2-year program, part-time. First year preps you for the CFP exam, and the second year finishes out the MBA with a financial planning focus. But Cal Lutheran is right next to my hometown where my wife and I both grew up, and we knew we were planning on moving back there eventually. So it's like great local network. And despite being a private university, was somewhat affordable, more expensive than a certificate program, but somewhat affordable. And it landed me with the MBA, which was, something that was important to my wife who was going to be the one supporting the family while I was making this transition. So did that, and then have had a whole bunch of random other things I've done since then.
Gotcha. Yeah, it was funny you're mentioning all roads lead to Kitces. I was talking to a guy at a networking event recently, and he was like, "Oh, I have an RIA and I'm in financial planning." I'm like, "Oh, that's great. Like, so you know Michael Kitces?" And he's like, "No." And I want to be like, "Then you're not a financial planner.
Oof.
Go away." And he was a financial planner. Just not everyone reads things on the internet, I guess. It's just sort of an amusing conversation. But anyway, so how old were you then? So because you had several jobs and then going back for your MBA. So how old were you like when you made this career switch into getting your MBA and becoming a financial planner?
Oh yeah, I'm the worst stereotype of millennials ever. I was 25, 26. I'd hopped around a bunch. I lasted at the initial tech job for about 2 years before I burned out on the travel, and then I did a year and a half at the insurance company, and then after getting married, decided I want to try something else. So every stereotype.
Well, I love it. Meg Bartelt just posted something in the VIP group about it, but it's like, an example of what type of planning opportunities exist in young people's lives. Because, we still get that blank stare from financial advisors and like, what do you do for young people? And I'm like, look at your life and all of the opportunities. If you had a financial advisor, if you were working with, Galen throughout this process, what that would have looked like and how different that would have been.
I mean, I can give you my exact spiel that I use, which is based off of that idea. In the past 5 years, 6 years now, I guess. It was 5 years when I started saying it. 6 years now, I have graduated college, moved halfway across the country for a new job, changed jobs, got married, changed jobs again, moved back halfway across the country, went back to grad school, finished grad school, started a new job, started my own business, and now I'm considering having kids.
But what planning opportunities exist in any of that?
I mean, I don't know.
If there's not $1 million in assets.
I can guarantee you there's not $1 million in assets.
If only. I love it. All right. So that was sort of your path into financial planning. I'm assuming the MBA qualified you to sit for the CFP?
Yes. Yeah. The first year was the requisite courses, including the capstone.
Okay. So have you gone through the process of getting your CFP now?
Yeah. I've passed the exam. I still need a year-ish on my experience.
Okay.
Yeah.
So what was your path then so now you've launched your own firm. You didn't do that right out of the MBA program. It doesn't sound like. So I guess what was the jobs that you had post-graduation?
Right. So actually, since it was a part-time MBA, for 1 year of it, I was working at an Ameriprise firm that I'd gotten connected to via an alumnus of the program. And I wasn't thrilled with it being Ameriprise and some of the business's practices, but actually the specific franchise that I worked for was amazing. The guy who ran it was super into the E-Myth and operationalizing his business. It was a two-owner team where there was the guy who was the founder, who was a JD, and then a full-time sort of head of paraplanning who was from the MBA program, whose entire job was the back office planning piece. And they had their own clients, and then they had their paraplanning center that contracted out to 2 other Ameriprise advisors and helped them with business best practices as well. And I worked in that office under the guy who was the head paraplanner and got a lot of experience making plans and looking at different situations.
That's fascinating. I've never heard And for folks that are looking, my understanding is Ameriprise's, each of the franchises can be very different. It's actually a really good group to look at. It was the one I actually interviewed with and didn't get the job at back in the day, but I was going to be in headquarters, not one of the franchises. Yeah, I have heard that it's a great group to be involved in. So just because sometimes we rant about not being fee only, there are the good guys in that world. So Ameriprise can be a great place to look. But I've never heard of the setup to have a paraplanning group working for you, but also working with other franchises. That's a really cool way, one, to cross benefit and probably bring in some revenue to cover the cost of the paraplanners. But again, giving you some intense experience working with different advisors and not just one or two and seeing the way they're doing it.
Yep. And that was, the cross revenue piece was a part of it, as well as helping just grow best practices. With Ameriprise, you guys had already because I'd found a lot of stuff in the industry via Kitsis, you guys had already kind of planted the bug in me that there's a specific way of doing things that really matches Kinder's lighting the torch, which is, like I said, my inspiration. So I knew that wasn't going to be my permanent place, but I got a lot of great experience from it. And I was able to do it while working on my MBA. So I got a lot of, I could learn something in class and then immediately use it at work, or I'd learn something at work and then they'd teach us about it in class. And it's like, I've done this 100 times. My estate planning class, despite being very difficult, because it was actually an estate planning class that was supposed to be for estate planning attorneys, was a lot easier for me than a lot of the other people in my class, because my boss at the time was a JD. So he was able to do a lot of those pieces. So I was like, yeah, I've read 100 trusts already. I'm familiar with a lot of these things.
I know how these work. They're not just theoretical paperwork. Because I went the opposite route. I was taught the theory and then read a real one. I was like, what the heck? This isn't what we read in grad school.
Yeah. It didn't pay a ton, but it was a very good job in terms of learning a lot. But it highlighted a lot of the things that I didn't want to do in the industry. The advisor I specifically worked for and who helped put together that paraplanning center was really great. Some of the advisors we supported weren't. I had a note that I kept in my desk that was a reminder of that, basically, where it was one client who was a housekeeper with 3 different jobs, making $40K a year across those 3 jobs, and had 2 VUL or IUL policies or something like that, because it was the only way that they could profitably have her as a client. And that didn't sit right with me, both on my education side and just on my personal, how I feel about how you treat other people side. So I'd known that wasn't going to be my long-term place. And so I took some time off from that job to study for the CFP, and thank goodness I passed it on my first go, because I was really worried about that. But while I was studying for it, I joined a mastermind group where we actually found folks via the XYPN Network Facebook group, the VIP group thing, and they were virtual paraplanners, and I was kind of interested in that. And so Alex Hopkin of my group, who works for Sophia Berra and runs now Simply Paraplanner, which is the sort of placement service, had a job that she was rolling off of. So she introduced me to them, and they're out in South Carolina, and they hired me to do virtual paraplanning work for them. And I was doing it a couple hours a week while I was doing my studying. And when I came back, the combination of me taking on that job and Ameriprise talking to me and realizing that I wasn't going to be there full time meant that I got fired, which really, really sucked. It was the weirdest thing, because it sucked to get fired, even though I knew I wasn't planning on staying there.
Yeah, just the act of getting fired sucks.
Yeah, it doesn't feel great.
So just to be clear, did you have to disclose it because you, as an outside business activity, or were you getting registered with that other firm to do paraplanning, so they sort of caught it? Nothing so technical. I was not so clever and added it on LinkedIn, and they saw that.
I was not giving client advice, so I didn't have to be registered at these firms. I wasn't even necessarily in front of them. I might have been in a meeting taking notes, but not actually presenting advice. And I wasn't doing sales or anything. That was August of 2016. And so for the next couple months, I worked on a business idea with a guy I know who runs a fairly successful personal finance podcast and blog that didn't end up working out. But during that time, I went to XYPN 16, which I guess you guys are rebranding, but XYPN 16, and did Heather Jarvis's pre-conference thing on student loans and realized that I would definitely be able to make a business off of that, off of what she taught us there and the tools that she gave us. I'd also, knowing that I was planning on working with younger clients and seeing it a lot with some friends, I was fortunate enough to not have student loans, but seeing it with a lot of my friends, I had focused a lot of my research in my MBA on student loans. So like my behavioral finance paper was on the outsized impact that student loans have on, happiness and satisfaction relative to other type of debt, basically unsecured debt versus secured debt, and why financial planners need to learn about it. With the summary, by the way, for anyone listening, being even if you don't work with young clients, your clients have kids, and those kids probably will have student loans unless your clients are remarkably well off. And I doubt there's any way to make your clients happier than helping their kids with something.
Yeah, it's interesting. I haven't seen the research around stress levels to do with that. But yeah, I can imagine that's a huge issue.
I can send you the paper. I can't claim that it's phenomenal, but I wrote it and it's all right.
If you could send me an audio version, I'm not good at reading, but I can listen. So if you could record yourself talking, that would be great.
It's not very long. It was for an MBA, not a PhD. But yeah, so anyways, after that conference, I said, I can start to do this. So I started putting out feelers for if people would need help with that kind of thing, and got a couple referrals from other financial planners who had people, either clients' kids or prospects, approach them with the issue, and they knew it was complex enough or started looking at it and realized it was complex enough that they didn't want to really deal with it. And that became a full-fledged business in January of 2017. Basically, since then, it's been a lot of marketing locally to planners who are more in the traditional space because it's low-hanging fruit around here. They should be. It's a well-off area. And then XY Planning Network members who maybe don't specialize in it through the firm that I do contract work for, if they find people with it. I've looked at the local dental society. I've had a lot of local mortgage brokers really interested in it, the ones that focus on first-time home buyers. So just sort of all over the place marketing that. And I got pretty decent at it. And then last little bit on the career-y thing was after finishing my MBA, I realized, I've got this sort of these two weird side business thingies, and I don't think I could go work for someone else and keep doing these. And I'm not a great employee normally anyways, so I might as well try my own thing for a bit. So I registered an RIA.
That is so awesome. I mean, it's not awesome to get fired, and it's, sucks that a post on LinkedIn is what did it. But, good learning lesson for anybody that's thinking about starting your own firm. Because, we've seen it a couple of different ways. I mean, one is if you have the conversation around like, I want to, start my own firm, or I want to do outsourced paraplanning or whatnot, you have to be prepared for your boss to go one direction or the other and either allow it and be excited for you or fire you, immediately. With you, it was honestly, sounds like a slip up, that was not the intention. And then I sort of came at it the other angle where I got fired, and I think a lot of it had to do with, I think I had checked out a little bit without realizing it, because I was thinking about it'd be cool to start my firm, and I'm not happy here. And I didn't even have a business plan. So I wasn't too far down the line, but I think I checked out enough that it became apparent that I wasn't fully bought in. Mm-hmm. And so my encouragement for people that are thinking I'm in an advisory firm, I'd like to start my own business one day, is keep your head in the game. As hard as that is, from 9 to 5 when you're at the office, you're getting paid a salary, do your job and do it well, and do this other stuff on the evenings and weekends, because it will become apparent and it will come up, and honestly, it will bite you in the butt at some point, just because we just hear it too often, that something has happened, a post on LinkedIn, this mental checkout, or somewhere in between that it does happen. So.
Oh yeah, for sure. And honestly, the Ameriprise firm was right to fire me because they were looking for someone who would be there and grow as their junior advisor, and that it became clear that wasn't what I was looking for. And so They wanted to start over and find someone who would do that. And so, while it sucked at the time and I wasn't happy about it, upon reflection over a year later, it's that was the right call. Can't blame them there.
Yeah, and what's tough for me is the industry is still not to where it can handle short-term employees. For whatever reason, the average millennial will change jobs every 3 years. So But for whatever reason, in financial services, we look at it as when you get hired, if you say I'm here for 3 years, you'll never get the job.
Mm-hmm.
Like it's a lifelong career. With every position, it's a lifelong career. And I think it's interesting that advisors keep saying like, oh, I can't find anyone to stay for their entire lifetime. I'm like, what other business hires you for lifetime, career contracts? Like no one. So like we have to build out the profession in a way that it can support someone coming on board for 3 years and saying like, hey, look, Galen's not going to be here forever, but he's awesome at what he does. And we love this area of expertise. And, maybe, you're here full time and then you become part time and maybe they contract you to do student loan work for them. But like, that's not top of mind. Top of mind is like, who's going to be here to take over this company in 30 years?
Right. Well, and that's the interview question, right? Where do you see yourself in 5 years? About to go to my third job is not going to.
Yeah, I have started just saying in the interview process, and I'm by no means a great interviewer, but I don't know if this is a helpful question or not, but I always say like, look, in 5 years, I do not expect you to still be doing this position. So what do you want to be doing then? Like I'm not hiring you, like you're not going to be our, event coordinator in 5 years or 10 years, more than likely. And if you are, you probably have like a bunch of direct reports and you're running a bunch of events. So like, what else do you want to do? And I've been surprised that people will open up a little bit and say like, I really see myself getting into event marketing or some of these other things. I'm like, I want to keep you in the XYPN family of companies, but like, there's also other opportunities that are out there. And if I can get like 3 to 5 years of awesome work out of you and then, and you benefit us and we benefit you and then you end up doing something else, like more power to you. Like, I think that's fine. I don't know. That's just my attitude about it, I guess, because I couldn't hold a job for 3 years, much less any longer.
I mean, I'm averaging like 1.5. So
yeah, I think XYPN is officially my longest job. And like not by a small margin. I think it is now double the length of any prior engagement. So I don't think that's something to brag about. So anyway, so I'm curious, explain the makeup, I guess maybe percentage of time or percentage of revenue. And I know these can be sort of rough numbers. Like how much of your time and how much of your money is being made in these different areas? Is it pretty even because you're doing outsourced student loan work, you're doing outsourced paraplanner work, and then you're also working directly with clients. Is that correct?
Yep. So the paraplanner work is at most a couple hours a week. It's not a ton. I had considered pursuing that at a higher level for a while, and then basically realized that there was a good chance that I could do other things. So I still have this contract that I've been working on, and I like the company and the folks that I work with there, but I've not really been pursuing other ones. So that's not much. It's a couple $100 of revenue a month. The student loan part actually makes up the vast majority of my revenue. So I charge $600 for a student loan plan where it's, half up front, half at the end kind of thing. And that in most cases, that usually puts me somewhere between $150 and $200 an hour, just because I've gotten pretty decent at being efficient with it.
Okay. So 3 to 4 hours to do a student loan analysis for $600.
Yeah, and that should be coming down a bit. I've just, after the XYPN 17, I've just started using one of the vendors who presented there, CSLA Tech, who does the student loan stuff, and that should reduce a lot. Heather gave us a starting spreadsheet, and I built it out a whole bunch, but it was still a lot of manual work besides the initial import, and this should reduce a lot of that, so that'll shave, I don't know, half an hour off of most plans, which is nice, which adds up.
Yeah, that's awesome. Keep charging the same amount, but just make more per hour.
Providing the same value, just right. More per hour. That's the vast majority of my business.
I did not realize CSLA was actually functional for advisors. So CSLA was the runner-up in our fintech competition and it's the first that I'm aware of, the first student loan analysis software. So have you been happy with it so far? Obviously, you're a month in.
They and Student Loan Buddy was the other one who was there. But yeah, I mean, I've been happy with it so far. Like I said, it basically replicates what I built in spreadsheets and just does it automatically. So I love that. It's not that different from what I've been doing, what I was doing before, I guess I'll say. But that's not a bad thing.
Gotcha.
So I have enjoyed using it. It's something like $3 a month a client. So if there's something were to turn into an ongoing engagement, it would cost me $3 a month for that person. And if it doesn't, it costs me, maybe at most $9 to $10 per case. So that's about the fee that I pay to my payment processor. So that's not bad.
Yeah, that's interesting. And just to wrap up, so student loans is the primary part of your business right now. And then do you expect to continue to ramp that up and sort of grow that out? Or do you think working directly with clients is going to be the area that you focus on?
I think in the long term, it'll be the working directly with clients in an ongoing financial planning relationship. The student loan piece, there's a ton of need, and it's an immediate problem that I can solve, both for other advisors who have prospects come to them, as well as just for people who find me. They tend to have student loan balances. And I like doing the work. I can make a big difference for someone right off the bat. So even if they can't hire me today as a financial planner, if they weren't referred by someone else who would also want to be hired by them, I can keep, I keep them in sort of a drip marketing email-ish thing over time and send out announcements and stuff if things change. But I see myself always keeping it as a part of the business. I think it'll be, I'm still really new at it, clearly. If this succeeds and I grow to the point where I am looking to hire someone, I think it's also a great place for that person to start, because it is technically in depth. There's a good deal of learning to do. And it's also something where you have to be working with clients who are usually facing their sort of biggest demon, honestly, financially. So it takes a little bit of a deft touch there. So I think it's a good place to train people and to bring them on where they can not only do, probably paraplanning work for me, but also be an actual source of revenue, which they could get compensated for. Because with my paraplanning work, I've talked to a couple of XYPN members who are looking to hire, and they straight up weren't able to offer me enough time to make it worth it for me to do it. They were great companies and they were paying a reasonable rate, but it's like, 5 hours a week and you want me to commit to your firm? I can't commit to growing as a junior advisor in your firm on 5 hours a week. I can't make that the numbers work. And you're trying to hire a planner. I run the numbers.
Yeah, it's really tough to scale. There's so many pieces of this I want to talk about. And you're just in the middle of this world of piecing together a firm and trying to figure out sort of, and correct me if I'm wrong, but trying to figure out where you want to go and how all of these various pieces contribute. Because on one hand, I can encourage all day long, drop everything and just focus on where you want to be. But you need the revenue, I'm assuming, and so it's where do you focus your time and energy in a productive way? And I love the student loan outsourcing concept, because it's, outsourced paraplanning is an interesting one. But again, I think a lot of those advisors that are hiring 5 to 10 hours a week are sort of looking to grow someone from 5 to 10 to 20 to 40, and they just can't commit to 40. But, if you're working, and we had Jennifer Pritchard on the show, I had to look back at what episode number, but she's working for 4 advisors, and it's a tough business model, because if you're working 10 hours a week for 4 people, and not everyone needs 10 hours a week. Sometimes they need 5 and sometimes they need 15. And what happens when 3 of your 4 advisors need 15 one week?
Yep.
You're not available, and so it's all right, well, which one, what happens when one of them needs 20 a week on an ongoing basis? And so it's not impossible. It's just tough. So I really like how you're doing the outsourcing on more of a project basis. But I am curious with the student loan, one, does the client pay you, or does the advisor, or is it sort of a mix?
It's a mix. It depends on what the advisor wants a lot of the time. So sometimes some of the referrals that I get are someone who's approached an XYPN member. Their primary issue is student loans. They might not be a great fit for that person's services, so they just send them to me and say, hey, work with Galen first, because that's your major pain point that you need solved. And then, at some point in the future, you might be a good prospect for this business. And sometimes it is they want to do it collaboratively. So I've had some advisors reach out to me and say, hey, I know this is a gap in my knowledge. I'd love to learn it and work with you to learn it over that period of time, that's also fine with me. And then the advisor pays me.
Right. That makes sense. So yeah, because if you're charging $100 or $200 a month, that's $600 is a reasonable, or as a meaningful number, I should say. Now, I don't think it's insurmountable, but it is, I could see where they would have the client pay you. But So looping back on CSLA, this is interesting. So CSLA charges per month per client. And yet student loan analysis from an advisor perspective, I suspect is more of a project-based work and less ongoing. But I guess how do you see the software fitting in? Like, do you think leveraging that software, student loan analysis and updates, like, does that become an ongoing service? Like, regardless of ongoing financial planning, like, is ongoing student loan analysis a viable service model, and like you can charge for it and create value and make money doing it? Or have they honestly just maybe mispriced and should be doing more per, flat fee per client?
Right. So I talked a bunch with them actually at the conference, because we also then happened to be sitting at the same table at one of the events. But my understanding from them and their logic on it was basically, if you bring on someone as an ongoing client, then you want to do things like, if they're on income-based repayment, you have to recertify that every year. And if you don't recertify it, you get booted off the plan. And guess what? Your interest capitalizes when you change plans that you're on. So part of it is a tracking tool. Part of it, their idea, I know, is even if someone doesn't become an ongoing client, you're basically paying $3 a month to have that person be reminded about you once or twice a month as someone who helped them, which honestly I buy. And then they said, and sometimes, it'll be just you work with them over the course of about 2 months and then you're done. So I think that's their vision on it. I plan on keeping it as a project-based thing, but if I do use it for someone who's an ongoing client, I'll keep it going, because I think it's so valuable to have the ability to remind them of when it's time to, do their annual recertification of income, family size, so on. But also just the B piece of it with, you probably do want to redo that analysis every couple of years, especially if it's someone. So my sister's in med school right now, and coming out of med school, she'll have a ton of debt and she'll probably want some plan at that point. But, 7-ish years maybe into her career, it might make sense to reanalyze it. And so if you get clients like that, where they have a high debt load, but they're also in a professional career, I could see that making sense.
Makes sense. Yeah. I'm not aware of anybody that like just does student loan analysis as their ongoing service model.
It's project-based from what I've seen.
Yeah, me as well. That there are folks like you that is their primary focus, but I'm not aware of anybody that does that on a retainer ongoing basis, which, eventually they pay them off. But like I said, there are a lot of doctors out there that you can work with for, 2 decades in order to get them out of debt and then saving.
Yeah, I don't really see the just student loans as an ongoing thing being a viable business model. I mean, maybe it is, but I haven't seen that opportunity myself. If that was just a piece of overall financial planning, for sure, because it's going to be one of the bigger factors for a lot of younger clients. But I don't know on its own.
So so you charge $600 for student loan analysis. What does that look like? Like what all goes into that, and sort of what are you delivering to the client or to the advisor at the end of that engagement?
Mm-hmm. So the $600 involves, with everyone who's a prospect, I do a free initial consultation where the point of it is to make sure that we seem like we'll work well together, that we like each other, that it's a service that they actually need, and then to gather some basic information about their student loan situation. And then if they do sign with me, it's a bit more. And then after that, Heather Jarvis, one of the tools that she had from her thing was an organizer. Basically, it was an Excel spreadsheet where you could import stuff from their student loans and get it organized in a nice format. I send that off to folks, even if they don't hire me, because at least then they have a better picture of what they're up against, and it takes me 30 seconds to do. So I might as well help someone out with their student loans a bit. If they do sign with me, it's a bit more data gathering about sort of future financial expectations and goals. What are they trying to do with their loans? Some people, they're in a good enough financial position that it's pay them down as efficiently as possible while taking advantage of other opportunities, like learning what other opportunities to keep their eye out for. Some folks, it's aiming for forgiveness and what it'd look like for them to save up for the tax bomb that you have at the end of student loans if you aren't student loan forgiveness, if you aren't on the public service loan forgiveness. And just figuring out too if they are looking at an income-based plan, what are their rough guidelines for their income growth? And will there be periods where that changes, like if they're expecting to have kids and things like that? And then the output is a 1 to 2 page plan that basically says, do A, B, and C with these loans, watch out for these common pitfalls, and then a couple projections of what it would take to pay their loans off at different time periods. And then at that point, it's an hour-ish, sometimes longer, sometimes less, depending on the person. Call with them to talk through the recommendation, but then also talk through here's why I'm saying this. Let's reconfirm that I actually captured your goals correctly, that now that you're seeing the numbers, your gut is in line with what your head said when we were talking before, that kind of thing.
Gotcha. So what are the actual print out deliverables that they're getting? Like, are you summarizing it in a way, or are they getting, the 100-page financial planning book?
No, it's a 1 to 2 page Word document. And the reason it might be 2 pages is because it's bullet points, and bullet points, take up more time per words, or more space rather per word. So it's 1 to 2 pages. And I can send you guys a typical example. I've got some, when I've been marketing to other planners, I have a sort of anonymized one that I put together of what the output looks like on the calculation side, as well as the deliverable side. But it just basically is some bullet points about, here's what I think you should do and a couple reasons why. And then here are the things to look out for, like interest capitalizing, like making sure you recertify each year. Like if you're on the repay plan, where technically if your income grows enough, your payment can grow higher than it would have on the 10-year standard plan, at what income level that would happen, those kinds of things.
Okay. Yeah, that makes sense. Yeah, if you want to send that to us, we can post it in the show notes so that we have a sample plan for just sort of what this looks like. Because again, it's one thing to say we provide student loan analysis services. It's another thing to actually see what that looks like.
Yeah. And I mean, the output is short, but there's a lot of analysis work that goes into it. But I think if you're presenting to a client, you're not doing a good job if you're giving them all of the things that you ever considered in this thing and all of the calculations. They're paying you to give them something they can understand.
Yeah, no, that makes perfect sense. So you said the primary source right now of these advisors, just local networking and other XYPN firms and that sort of thing. What are you thinking? Like, are you getting multiple clients from each advisor? Like, are you working with one advisor and getting like a case a month or a case every 2 months? Or is it really like these advisors are running across one every 2 years and they need someone to outsource it to?
It depends on the source and how big. So there's some local advisors where I've gotten one referral from them who happened to come across their desk, and I sort of don't, it'll be a nice bonus if there's more, but I don't really expect that that'll be common. For some of the more established XYPN members, I'm getting usually a referral every month to 6 weeks, just because they get a lot of people knocking on their door, and a lot of those people who are in a position where they've got a lot of student loans. There's also some larger local firms that just see more volume, so tend to send me a little more in referrals. And then I think a center of influence that's going to be building a lot for me and has already actually yielded a couple clients will be, I think I mentioned it briefly, the local mortgage brokers who specialize in first-time home buyers. There's 3 or 4 of them around here. And debt to income is a major part of their calculation. And a lot of the people that they're working with who are looking at buying homes are professionals who actually can swing multiple payments at once, even if it adds up to a total higher debt load. So they want to send folks my way to figure out how to, A, if that can be managed at all, and B, just to help them with their student loans in general. Because then, when they are actually ready to buy a house, who will they remember? Well, the mortgage broker who helped them with their student loans. Yeah,
that makes perfect sense. I never would have thought that a mortgage broker would be a good center of influence to send you folks, but from their perspective, it's like, if they can help that client get sort of on their feet financially and be sure their debt is taken care of, especially student loan debt, which supersedes their paying their mortgage, then that's a win for them. So it'd be interesting to see if over time, like the mortgage broker, like, do they start paying for it, or is it still the clients and they just have to pay for it, go through this process in order to qualify for a mortgage? That'll be interesting.
They'd probably add it as points to the loan, even if they were going to pay for it.
Of course they would. I mean, they're going to pass through the cost.
Yeah, exactly. Yeah, that wasn't one. I'm not like some genius who thought up of that, one day while sitting and brooding over where I could market. I went to a local local chamber of commerce has a group that they call Emerging Leaders, which is a young professionals around here. And I was at one of their events and was talking with someone who was a mortgage broker for first-time home buyers. And we realized that we had some things that lined up. And then that's happened 2 or 3 times at different events.
Oh, that's awesome. That's good to know. Yeah, it's in-person networking can work. You just have to be in the right place. And like I said, you're not just asking for clients like, hey, you're getting clients, send them to me. That is a very mutually beneficial relationship because you're going to help that mortgage broker write more loans, honestly, because you're going to make their borrowers more capable. And in this day and age where pretty much every person in their 20s and 30s has student loans in some capacity, like they're going to be running across this all the time.
Oh, yeah. And they see that coming, and they've been seeing it. So they recognize it as a need. I know one of them said that he actually might be interested in just having me come and talk to their office, a mortgage broker's office, about this different student loan stuff because they're running into it so much.
Yeah, and that's a great presentation to give because there's no way you could possibly teach them everything in 30 minutes or an hour. You can just really stress them out to say, like, look at all these things that you need to be aware of. And I've said this on the show before, I know, but I remember talking to an advisor that said, like, what do you mean you have to, like, student loans are complex. You don't just pay off the highest interest rate one first. And I was like, do not ever speak about student loans ever again. You're going to get sued. Like, no.
That person's not wrong if the person with the loans is earning enough money that's the only issue. But
correct.
That's a limited subset of cases.
Yeah, and I think that's where a lot of folks just sort of default back to their, back to debt payoff routes, like highest interest rate first, no big deal. And it's like there are too many programs, too many things that go into the equation that honestly, if you don't know, like you could screw up a client situation and cost them hundreds of thousands of dollars. These are not small mistakes. This is like, incorrectly, advising a client on when to take Social Security, or whatever. Like these are what seem to be small decisions that have very big, very meaningful financial impacts on your clients.
I say if you want to be dramatic towards someone who says something like that, just ask them what they'll do about the tax bomb, because it sounds super dramatic, and it is. And so yeah, the whole when you get forgiveness outside of public service loan forgiveness, it's counted as income on your return that year, and what does that mean in terms of your taxes? I'd be surprised if that actually ends up hitting more than the first couple of people that it actually hits, just because, come on, the people who are doing income-based student loans aren't also saving up tons of money to afford a huge tax bill. But it sounds dramatic, so...
Yeah, and will be a problem. I mean, that was one of the questions I had for Heather at XYPN 17. I was the moderator of a panel for her and Joe Messinger talking college planning because they both did pre-conferences at the event. But, that was the big question is like, what, we're just now hitting when the 10-year sort of the PSLF folks are coming up due. It really won't hit for another couple of years just because of some weird rollout rules around or how it was all rolled out 8 years ago now. But in another 10 years after that, that's when folks are going to start getting forgiveness. And so the question is, it's currently taxable. Is it really going to stay taxable? Like, are we really going to try to collect? Because all of that's income, right? If you forgive $300,000 of student loans and you're not inside of one of these, inside the 10-year program, you're on the 20-year payback program, that's $300,000 or $200,000, whatever the number is, of income. Like, that's a massive tax bill.
Yep. And your marginal tax rate shoots up a lot.
Yeah, you're going to be in that 40%.
Yeah.
Trying to cover all of that.
Yeah.
Yeah. So I guess what are you recommending? Are you having clients save into a tax account for that situation?
Oh, yes. Yeah, absolutely. Basically, I say what I just said about, while I don't know that this actually will be a thing, it's something that right now is real and you need to prepare for it. And since we're usually getting you a couple $100 a month more free in cash flow, here, it's a basic time value of money calculation. Let's reverse engineer what it would look like to do this in terms of how much you'd have to save each month. And I'm fairly conservative on it, like mostly keeping it in cash kind of thing. And then, what's the worst case scenario? Oh, sorry, what's the best case scenario is they get rid of it, and then you've got a pile of cash. Congratulations. Like, that's not a bad outcome.
No, it's very true. I had a a client that was an attorney that was sort of in that same boat. Like we got him on the program because he wasn't making nearly what he thought he was going to be making, but out of law school. So huge debt, lower income. But like, yeah, it's a big number. I mean, I think he was setting aside $800 or $1,000 a month because that's what the tax bill was going to be. You're not, most of the income-based programs, like you're still accruing interest. I mean, and then your interest starts capitalizing because you're paying interest on interest on interest, and it just continues to compound. It's a really tough calculation to see, and you just pray that, one, the program goes to fruition, which I think it will. I think it'd be a tough thing to rip out from under people, but two, that they don't actually charge or make it taxable income, because that's going to hurt a lot of people financially. I mean, I bet there are a lot of people that would rather keep making monthly payments than get the tax bill, because the IRS is not nearly as kind with their tax, payback programs.
I would be very surprised, just given, limited. I'm about to turn 29, so not that much experience, but I would be very surprised if that is proactively dealt with. My guess is it will nail a couple people to the wall with an unexpected tax bill, and there will be very real and good outrage about it, and then something will change. So It's going to suck for that first wave of people, is my guess. I mean, maybe we'll look into the future and actually make proactive decisions, but
yes, that's how our government always operates.
Yeah, I have really high faith in that.
Not to get political, but I don't think I've never seen a group of politicians be able to look more than, or basically past the next election.
I'm asking you to look 20 years in the future and give up tax revenue.
Yeah, give up tax revenue.
Try and sell that one.
You won't even be in office. Have fun. Based on the age of most politicians, you probably won't even be alive. But like,
try and sell that one.
Mm-hmm. So I guess what are you going to be working on over the next? You're a year into the business. Sounds like things are going well. Do you mind sharing sort of your gross revenue for the last sort of your first 12 months and what you're looking at over the next 12 months?
Yep. So I am 9 months in, actually, and I've worked with, honestly, my focus is going to be on building the ongoing clients piece for the RIA, just because that's work that I enjoy a lot more, and it's honestly better for revenue to have recurring revenue. It's so much more, makes you just feel better. So that's going to be the focus. And I've done I feel like a lot of the marketing on student loans that I'm going to do. I mean, I'll keep talking about it with other people, but I don't think I'm going to make it be my big sort of focus going forward. I've worked with, so far, 14 clients, made about $5,500 off of that piece of it, the student loan piece, which is, nice to, if in case that didn't tell you, I started off at a lower fee and then raised it very quickly. So yep. Just since I'm sure you can do that math. But yeah, 14 clients. I actually have 2 calls today and 2 tomorrow with prospects. So hopefully that's higher. We'll see. My closing rate's about 70% for people who actually talk to me on the phone. There are people who...
pretty impressive.
It means I charge too little, right? There are people who email me.
You're probably doing a good job filtering to get, when they're getting to you, like they're in need of your services, and it may be an easy sell for you, which is awesome.
Oh, for sure. As unfortunate as to say, it's a pain point that's easy to say, hey, look, here's this thing. I can help you with that. They're really feeling it a lot of the time. So it makes as sad as it is to say, it makes my sales process a lot easier. But yeah, $5,500 so far in revenue from that. On the ongoing side, honestly, this is my own screw up. But since mid-May, I have 2 clients from it, so not great. And they're both from, I started off initially working in sort of an attempt to work into a passion-based niche of people who I think could be good clients. It's an emerging industry, but it's a very tight-knit emerging industry. And I'm going to be speaking at their major conference in a month, which I'm really excited about. But that one hasn't yielded much fruit. And then I started working with a business coach who kind of whacked me across the back of the head and said, work with your natural network more. So I turned back towards that company Epic that I worked for. You can work there, make $70K a year in the Midwest, which is absolutely incredible. But if you leave and wait out your non-compete, you can start making $150 to $200K a year as a consultant. And so I did that. I did that for a bit in between American Family Insurance and grad school, because it helped me save up a lot of money to pay for grad school. But a lot of my friends are doing that, and acquaintances and former coworkers. So I've been reaching out to them saying, hey, you're making $85 to $100 an hour. You could probably use some help. And I actually know the lifestyle that you lead and all these different factors. I can speak your language. So I've been turning more towards that, and that's been better for business.
Yeah.
So I mean, like I said, not much revenue year one, not much in expenses either, but not much revenue. So 14 clients, hopefully a couple more to close, about 5,500 in revenue over 9 months. And that's been, every month has been better, essentially, except for I had 1 month early on where I got one big swell, but since, so that like made my early numbers look phenomenal, but then since then it's been growth.
No, it's the reality of building a business in sort of this, I'm not going to say piecemeal way, but like with a couple of different things going on at once. This is, I think, pretty typical when you're sort of building that out. But, you also had this other income source, right? Which is awesome. And it's awesome to have that. So are you still doing tech consulting with that?
No, I am not. I am the reason that I can do this is because I am married to a wonderful wife who has a good job and is and believes, at least for now, in my vision of things, and is willing to support me while I'm doing this. If it weren't for her, there would be no way that this would ever work. And I would be doing that kind of consulting because I do get still a couple offers per month to go do it because it's that niche, essentially. So the fact that I have that, I should have kept doing it like from a pure monetary perspective. But no, the only reason that this is sustainable right now at this point, 9 months in, is because my wife can keep the family afloat while I'm building this.
So what is your goal with the business? I mean, where does this thing end up in 5 years? Do you want it to just be you? Do you want a team? Do you want, student loan is your thing? Do you have another niche that you think will become the focus? Like what's the vision for the company?
Mm-hmm. I don't want it to be just me. And there's a couple reasons for that. One is I think that's really bad for clients. If it's just you, you're concentrating all of your risk on just you. And what if you get sick? What if you get injured? What if there's a whole world of things that could happen? What if you become disaffected, right? Like not even sick or injured, but just sick of it. So I think that's a big risk for clients. So I do want to bring on other people. I think one of the first things I do is sort of the standard admin paraplanner role, just hopefully as I grow. Another thing that I want to do is I want to build this out as an ongoing planning based RIA. So the student loan piece, I think, will always be a natural funnel for that kind of client and will be something that I always want to offer because it's help that's desperately needed. And there are not going to be fewer people who need that kind of help. So I think I'll always keep that there, but I'd probably bring in someone else to run it. But for the RIA, I'd like to grow it basically into serving those two niches. One side being the Epic consultants, which sounds dramatic, but that's literally what their title is because the company is called Epic. And then the other part would be the streamers, because that's a passion project for me. And I think it's going to be a growing industry. But yeah, recurring planning, not just me. And I want to bring in a CPA at some point because the people I work with will need that.
So you said streamers. I doubt, and you mentioned that before we started recording. So I now know what it is. But so it sounds like streamers is sort of your new, or the niche that you're starting to focus on. So what is a streamer?
It is the niche that is my long-term hope because it's something that I am passionate about. It is a very, very unproven model. The Epic Consultants is a natural network for me, and it's people who are young and earning a good income. I feel like that's already a decently proven model. This other one, so streamers are people who, there's a website, twitch.tv, and what you can do on that is broadcast yourself playing a video game. Just for fun. People started doing it for fun. They do it because they can find communities of other people playing that game and things like that. It's a good place to watch other people do it, where you can learn about it, or again, just enjoy spending time with other people who have your same interests. Some people have been able to turn that into a full-time business. There are a couple of different monetization routes on it. And if you get enough people watching you consistently, you can turn it into a full-time business. That's something that I just enjoy consuming as content, like in my spare time. I've always been someone who's played way too many video games, and then I found that and was watching it, and I do it occasionally for fun, which is why I have a good microphone and webcam for my own hobby, which is just nice for business now. But it's a space where every single person who is a successful streamer, started off as a hobbyist and then accidentally built a very successful business.
Right.
So there's a lot of room for help. I mean, I write articles for my own blog as well as a bigger blog in the space. And the most viewed one is just called Tax Basics for US streamers. And it's like by far the most popular because people don't know about how to, in this space, don't know, at least initially, about how to run a business at all. But they are. And they have been surprised with large tax bills. And they don't realize they need to pay quarterly taxes. And, you know, sometimes one form of income is colloquially called donations, but that doesn't mean it's a donation to a 501c3 and therefore tax-free.
Yeah, that's a good way of, I made $100,000 in donations this year.
Yeah. People have tried it.
Sounds like an adult-focused industry.
and the thing is, there's people on it who are doing it purely as a hobby. There are people on it who are making some money and doing just fine. And like in terms of like, it's a nice little side income stream. There are some people who do it as their full-time thing where they're making maybe $50K a year on it. And there are people making millions of dollars on it. It's like any form of entertainment where the people at the top get the bulk of the revenue.
Right.
But millions of dollars a year in recurring revenue is what some of the people at the top have.
Yeah. Like I've watched Philip DeFranco on YouTube. I used to follow his stuff pretty closely. And yeah, I mean, that dude's probably making millions a year.
So this is a little different than that, actually, in that it's live.
Oh, I see. It's
live and interactive. So that's the big selling point, is it's live and interactive. If I were to tune in right now and go to someone's channel, I could talk with them. And that is a big selling point for building really dedicated communities, because if you're someone who consumes professional sports at all in the audience picture, you could, you know, ask a quarterback why they did a certain play after the fact. Like, and they answer you.
Yeah. That's awesome.
Mm-hmm. So anyways, that's a long-term interest. It's a super new, it's a newish industry. Twitch was bought by Amazon 2 years ago for $1 billion. So they see potential in it.
Right. Sort of continuing to monetize it.
Right. But the financial services in the space, I know of only one other firm that even deals with it a bit, and they do a pretty good job, but there's a lot of
people using it and there's only one person actually working on it. So, So Galen, as we're sort of coming to a close, I'm sure you prepped for the question since you have listened to most of the episodes, as you said earlier, but you know, looking back now, if there's one piece of advice that you wish you could go back and give your younger self, whether this was, you know, you starting a business or you working, you know, at that first Ameriprise firm, you know, what do you think that one piece of advice would be?
If it was me 3 months ago, starting the RIA 4 months ago at this point, it'd be just go out and market in person. You're better at that. If it was me just breaking into this industry, it would be, you're a bad employee and that's okay. Don't feel guilty about that. You can actually do your own thing and your wonderful wife will help support you while you pull it together. And as you've said over and over on this podcast, Alan, I can always get a job at another company in basically a heartbeat if this doesn't work.
Right.
So it's okay that you feel like you're a bad employee and there are other options, not just feeling like a bad employee all the time.
No, it's a great point. And you know, to your other piece of, you know, go out and market in person, and that's okay. You know, I mean, I know we do talk a lot about online marketing, and I do think that this has a lot of legs and can build out a great funnel for you, but you have to play to your strengths, you know, and if you're better in person, you know, own that. I'm better with centers of influence. I don't know why that's just where I'm better than in one-on-one sales for whatever reason. And, you know, some people are power networkers. Some people are great at one-on-one. Some people are power content writers, and like, more power to all of you.
Yeah, it's one-on-one for me. Arlene is my coach, and she was talking to me about potential things I could do marketing-wise. And she was saying, oh, do you have this roadblock? No. Do you have this roadblock? No. Do you have this roadblock? No, I actually love doing that. So why aren't you doing any of those things? Because I haven't found a group yet to go talk to?
So I did not realize Arlene was your coach. I think like 4 of our recent guests have been working with Arlene. So I apologize. That was unintentional. Arlene's going to get a reputation for working with thousands of advisors all at once. So she doesn't. I'm just having all of her clients on the show, apparently.
Yeah,
so,
I got to meet her at the conference, which was nice.
Yeah, Arlene's
like in person.
Awesome.
Mm-hmm. Although she, like, 4 other people at that conference afterwards said, "Wow, you're taller and bigger than I expected." Like, what?
She said that to you, or you said that to her? Oh,
no,
okay.
She said that to me, and like 4 other people at the conference did too. I don't understand it.
You are tall. People, I had somebody say something to me at the conference about, like, you're taller than the podcast would indicate. And I did not know what that meant. Like,
is that a compliment? Is that an insult?
I mean, and I think they just had in their head that I was a certain height. And I'm apparently taller than what they had in their head, which is totally fine. Well, Galen, thank you so much for coming on the show and hanging out and sharing about how you're building up this business doing student loan analysis work. I'm really excited to see sort of how the business develops for you and the impact that it has, because I definitely think it has a lot of potential impact on a lot of clients. So thanks so much for taking the time.
Of course. Thanks so much for having me. I hope it was helpful. And if people have questions on it, send me something. This is, as we talked about here, I'm doing a whole bunch of things at once trying to figure it all out right now. But if you're doing that same position, reach out to me. I've done that with a bunch of people on this podcast, and it's always been a good experience.
That's awesome. Thanks for making that offer. Well, thanks again, Galen.
All right. Have a good day.
Be sure to join our VIP community at xyplanningnetwork.com/VIP to hang out with other XYPN radio listeners, ask questions for future mailbag episodes with myself and Kitsis, and to finally find a community of like-minded financial advisors. Thanks so much for joining me today. We'll see you next time.
You're not alone, and you're not crazy. It's scary starting, building, and growing your own financial planning firm. And that's why we put together a free private community just for you, the Cutting Edge Financial Planner. Go to xyplanningnetwork.com/VIP or text XYPN Radio to 33344 and join a network of thousands ready to change the lives of Gen X and Gen Y clients.